earnings. Mr. Menon, great to have you on ET now, and great to actually see you on live television after a very long hiatus.
Yeah, thank you, Aisha. It's my pleasure to be on the show.
Right. Okay, so let's dive straight into your numbers and your Q1 revenue and EBITDA. The estimates sort of missed the estimates, if I can call them that, despite your strong RAC volumes. How
Yeah.
should we think about the earnings and margin trajectory for the rest of the fiscal? And what would you say are the key levers that you have in store for further margin expansion?
The set of numbers which came out were very strong, as you would have seen. A revenue growth of 19%, uh, PBT growth of around 41%, and a PAT growth of 51%. And Aisha, as you mentioned, the key driver has been segment A, which is the unitary cooling products. And within which the shining star has been the performance of the room air conditioner business, which grew by a significant 45%. So the quarter one has been very good. In terms of the overall numbers missing the estimate, I think it has come more from the segment B, which is the engineering project segment, where we had a muted, in fact, we had a degrowth in our segment B in terms of revenue and also in terms of EBIT. And I think that was the one which sort of dampened the overall results, which is visible in the fact that we indeed missed some of the street estimates. However, we are very hopeful that the other businesses which have done very well will continue to outperform the market going through the year. And also there is see a sharp recovery possible in the engineering projects and services business going forward.
Mr. Menon, what do you have to say about the PAT quality? Because, what analysts have observed is that while your adjusted PAT did grow about a good 52%, that was largely led by higher other income and lower interest costs, not quite the operating performance.
The margins of segment A, if you see, did grow by a good 2% compared to the last year, the same quarter. So the operating margins also, there was a significant improvement in the operating margins of segment A. And segment C, of course, is a very stable kind of performance, and we continue to make very healthy margins in segment C. Segment B is the place where I think we had a problem both in terms of revenue and absolute EBIT numbers. While the percentages did not look very bad, but I think that's the area which we have to work on.
Hi, Mr. Menon, this is Harsh here. Quickly trying to first off understand on commercial refrigeration, which you suggested has had a soft quarter, but recovery likely to happen. Could you give us the timing of the recovery? Will it be as early as Q2 or will it be H2?
So commercial refrigeration, as you rightly said, Harsh was had a very subdued quarter. So this was one category where the price increases which needed to be passed on because of the commodity price increase was very steep. In fact, the sharpest increase in prices which had to be passed on to the market was in this category. So there was a resistance in the channel and the institutional customers to buy at these high prices. So that was the dampening effect of the price increase that we saw. While in the room air conditioner category, we did not see it happen primarily because in that category, the GST, if you would remember, had reduced from 28 to 18%, sometime last September. So the consumer impact of the price increase was not that visible, though there was indeed a price increase, but still it got buffered with the price, the GST reduction. However, in the case of commercial refrigeration, the GST was always 18%, and this sharp price increase of upwards of 10 to 20% was a little, I think, a big dampening impact on the offtake of these products. However, come July, August, we are seeing a very good traction of these products, and I think quarter two onwards, this recovery is in place.
Much of that commodity cost inflation has been built in already now, would you say, and how much yet to go? If you can give us some color on that as well.
Actually, when you across the room air conditioner category, almost like whatever was the increase on terms. There were two major drivers for cost increases this year. The first driver was the table energy label change, which happened in the month of January, where the prices went up by roughly 7%. That has been passed through in full. Then there was a round of commodity price increases and also the increase in prices of the currency depreciation. Now, a combination of these two took up the prices significantly further by another 5-6%, out of which we have passed on around 4%, a couple of percentage still to be passed on to the market, and hoping that the West Asia crisis sort of winds down and things settle down in terms of price, commodity prices. As far as the commercial refrigeration products is concerned, the entire price increase, because it was a rather very steep increase, was passed through, and there's nothing left for a further pass through if the commodities remain at the current and the currency remains at the current level.
Right. So with weighted average prices already up 7 to 8%, Mr. Menon, following the BEE norm change as well, have you seen any meaningful impact on consumer demand or mix? And how elastic do you expect RAC demand to be to further price increases?
Yeah, I should, as I mentioned, actually, it has been a big saving grace that the government had reduced the GST for ACs sometime in September. So that 10%, 28% coming down to 18% translates into 7.8% reduction in the consumer buying price. Now, the cost increases and the price increases which were passed on to the tune, including the table change things, which was roughly around 10 to 12%, sort of got buffered with the 7.8% reduction in GST. So technically, for a consumer who was in the market last year to when he's in the market today, the impact on him was only 4-5%, which is still a manageable number compared to what it would have been if the GST had not come down. It would have been a very, very significant number. So in a way, we did not see demand reduce because of these cost price increases, because it was buffered with the GST reduction. And also, this is a category which is very dependent on the intensity of the summer. This year, we had a fairly strong summer compared to the very weak summer last year. So it played out, and we don't see this category sort of, while there will be blips year after year depending on the intensity of intensity of the summer and the early arrival of monsoons. It might happen over the next many years, this kind of blip. But the long-term story is very strong. India has a penetration of less than 10% for air conditioners, whereas other countries, most of the other countries have 40, 50, 60%. So I think the long-term story is indeed extremely strong for this category.
And just if you can give us some color on demand sustainability, because after the rains have come as well, it's been a very erratic sort of a monsoon. How are demand trends shaping up for Q2, sir? If you can give us a perspective on that.
Yeah, so Harsh, what has been happening is, in terms of the Q2 and Q3 are generally very low quarters from a room air conditioner perspective. So around 14 to 15% of our annual sales happens during this Q2 and Q3, whereas the heavy lifting is generally done in Q1 and Q4. So having said that, the Q2 numbers are still showing growth, but obviously not to the extent of that 40-45%, but reasonable growth, because as you rightly mentioned, there are many pockets of India where the heat is still on. The rain, the monsoon has added to the humidity of the place, and it becomes very uncomfortable for people to sort of manage that temperature cum humidity. So there is still sustained demand, though I would say not to the level of a peak summer month between February, March to June, which is the peak buying season.
Mr. Menon, I also want to talk about Attenberg JV for manufacturing RAC compressors. What is the size of this opportunity, and how should we think about its potential contribution to your revenue and margins once the capacity comes on stream?
Yeah, so this the commercial production from this joint venture is going to be around 18 months away, and this was more necessary from a strengthening our supply chain security, for a very important component of a room air conditioner. So the compressor is what we call the heart of the air conditioner, and we were very worried about keeping the security of our supply chain intact with all those restrictions which are coming in. The government of India has imposed, rightly so, has imposed restriction in terms of import of compressors. And there is a quota system of how many compressors you can import. The rest of it will need to be made in India. And this initiative is essentially to ensure that our supply chain is not disrupted. For a leader like us with a number one position where we have a 17.4% market share. For us, this is very, very important to ensure that no part of the supply chain is disrupted. So it's more security of the supply chain and lesser revenue generating sort of initiative.
On Voltbec in particular, how quickly does that turn profitable? If you can give us a perspective.
Yeah. So Harsh, what has happened is Voltbek, we ended up this quarter with a fantastic quarter, best ever quarter, highest ever quarterly sales in both value and volume. We also outbeat the industry significantly. And our market shares also touched I think, our all-time high in our history, 9.4% for washing machines, 7.4% for refrigerators. We also had made an effort to start premiumizing our entire offering in the market. So we are seeing multiple times growth, 2x, 3x kind of growth in our frost-free refrigerator range, including the side-by-side refrigerator, and a very significant growth in our fully automatic washing machine range, which is the top loading as well as the front loading machines. Coming to your main question in terms of profitability, this quarter, the price increases which happened due to the West Asia crisis also affected significantly our cost structure for the appliances business. And I think our ability to pass on the full thing into the market was a little affected. And I think this one quarter has, I would say, not been the best in terms of our ability to hit a EBITDA break-even. But whether we are seeing that EBITDA break-even happen in the next financial year, the answer is very, very much yes.
Okay, so let's try and understand how does it all translate into orders, because your EMPS order inflows were delayed, rightfully so, because of the geopolitical tensions, while the carry forward order book remains very strong. How should we think about the trajectory of the projects business in the second half?
So there are two parts of our projects business, Aisha. There's the first business, which is our domestic projects business. And we have three verticals within that, which is the MEP segment, the water segment, and the electrical and solar segment. We are seeing a good number of opportunities in the manufacturing and the data center segment within MEP business. And our sales funnel for this seems to be very healthy. We have also created a vertical for data centers, because data centers is happening in a very big way in India, and there's a big demand for MEP projects there, because these are fast track projects which get converted into a billing in 3 quarters at least. So we are focusing big time on the data center opportunity. We are also seeing a great opportunity in terms of the manufacturing, whether it's electronics or whether it's semiconductor. And here again, we have put together a very competent team to be able to deliver to the expectations of clients. The requirements are a little more stringent in terms of the temperatures, humidity, and all cleanliness of these kind of applications. They are also expecting us to finish jobs in a very fast track way. So we have put together a team to only focus on the manufacturing and the data center within the MEP business. So I think this is a business which will grow significantly. We also have another play which is sitting in segment A, which is our commercial air conditioning business, which manufactures chillers and VRF systems. We are seeing a lot of traction in this as well, again to cater to the data center, again to cater to the manufacturing segments.
last piece, I'm trying to understand how supply chain is shaping up and how commodity prices could evolve in the coming days. What the downside risk to that is. You stand at a very crucial juncture and at a very crucial position where you understand all of this. Give us a sense. What is it that you're seeing on ground?
So the on the commodity and the currency front, once this West Asia crisis sort of settles down, I think prices will certainly not go up for sure. So once the crisis is over, I think we will not be under any cost pressure. Just to give you a sense that we have a very active cost takeout project which we have been working on for many of our categories: the room air conditioner, the commercial refrigeration, and a commercial air conditioner category where we do the manufacturing of these products. This active cost takeout initiative is progressing extremely well for us, and I think this will make us well positioned to handle any volatility that may come along. And the very fact that we managed margins, I think, well in a quarter where you saw many of the peers sort of struggling in terms of the margins. I think this is the cost takeout initiative, which we started sometime in August last year. I think that's playing out in our favor.
Okay, good to hear that, Mr. Menon, and good to have you today on the show. Thank you so much for your time.
Thank you, Aisha, and thank you, Harsh. Yeah.